Bitcoin headed to $190,000 on institutional wave, research firm says. Tiger's model pegs a base price of $135,000, then layers on multipliers for fundamentals, plus 3.5%, and macro conditions, plus 35%, to reach the $190,000 forecast. Asia-focused Tiger Research has set a Q3 price target of $190,000 for Bitcoin BTC $111,367.30, arguing that record global liquidity, structural ETF demand, and new 401k access give the market its strongest setup since 2021. Tiger's model pegs a base price of $135,000, then layers on multipliers for fundamentals, plus 3.5%, and macro conditions, plus 35%, to reach the $190,000 forecast, giving a 67% from this week's average $113,000. The report relies on three key drivers: the M2 money supply exceeding $90 trillion, ETF and corporate accumulation now accounting for 6% of Bitcoin's supply, and a regulatory green light that has opened U.S. retirement accounts to crypto. Trump's executive order allowing 401k exposure adds what Tiger calls a definitive signal of Bitcoin's transition to a core institutional holding. Even a 1% allocation from the $8.9 trillion pool would equal nearly $90 billion of demand. Accumulation is visible. ETFs collectively hold 1.3 million BTC, while Strategy, MSTR, owns more than 629,000 coins, worth $71 billion. Buying through convertible bonds has given Strategy's flows a structural quality. Transfer volumes also skew larger, with fewer transactions but bigger sizes, reflecting a pivot from retail traffic to institutional block activity. Still, the report admits the network looks unbalanced. Daily transactions and active users remain well below last year's highs, and retail participation has faded. New initiatives like BTC-Fi are needed to reignite activity beyond institutional wallets. On-chain gauges also flash caution. MVRVZ, which tracks how far market prices stretched above what holders originally paid, sits at 2.49, a zone that in past cycles has preceded corrections as profits build up. Adjusted Spent Output Profit Ratio, a SOPR, is at 1.019, meaning coins being sold are only slightly in profit, suggesting traders are locking in modest gains rather than cashing out at extremes. Net Unrealized Profit/Loss, NUPL, a measure of unrealized profit and loss across the network, stands at 0.558, indicating a healthy but not yet euphoric positioning. Taken together, the data suggest a market that's hot but not yet overexposed. Read more. Public token treasuries and tokenization are fantastic for crypto, but risks remain, Binance CZ says. Shaurya is the co-leader of the CoinDesk tokens and data team in Asia with a focus on crypto derivatives, DeFi, market microstructure, and protocol analysis. Shaurya holds over $1,000 in BTC, ETH, SOL, AVAX, Sushi, CRV, NEAR, YFI, YFII, SHIB, Doge, USDT, USDC, BNB, MANA, MLN, Link, XMR, ALGO, VET, Cake, AAVE, Comp, Rook, TRX, SNX, Rune, FTM, ZIL, KSM, ENJ, CKB, Joe, GHST, Perp, BTRFLY, OHM, Banana, Rome, Burger, Spirit, and ORCA. He provides over $1,000 to liquidity pools on Compound, Curve, SushiSwap, PancakeSwap, BurgerSwap, Orca, AnySwap, SpiritSwap, Rook Protocol, Yearn Finance, Synthetics, Harvest, Redacted Cartel, Olympus DAO, Rome, Trader Joe, and Sun.